Welcome, brother, to the Resilient Minds podcast. I'm super pumped to bring you on. Really have more people hear about you. Welcome, everybody. Lane, how do I pronounce your last name, bro?
Kawaoka. Yeah.
Kawaoka. Amazing to have you, Lane. Honestly, I'm excited to learn from you, to hear from you. Tell us a little bit about your brilliance, the magic you bring to life, and kind of a brief background about you, so anybody that's listening sees the man behind the method.
Yeah. So today, we own $2.1 billion of real estate, 10,000 rental properties. I'm sure people know like Grant Cardone, but we kind of basically do the same thing, but we also develop and do some different asset classes without all the marketing shabazz, if you call it. But my story kind of started, I used to be an engineer. I got caught on this like linear path, I call it, of go to school, study hard, work a job 40, 50 years and do the traditional investment stuff like the 401k, stocks, bonds, mutual funds, ETFs. And I bought a rental property in my 20s, and I bought 11 rentals before 2015. And I kind of got a taste of this cash flow and alternate investments, mostly real estate and all the tax benefits you get from it, to drive your income down on, on that HEI chart. And I discovered other accredited investors on this path, and they were investing in these syndications and private placements in real estate. And a lot of these guys paying little to no taxes. And that was kind of my foray into, becoming more of an accredited investor. And then now, podcasting on the Wealth Elevator, my new book. And just not your mainstream financial advice for sure, right?
Yep. I love it, bro, and I'm really excited because I think that a lot of people, they are curious about everything that's happening in real estate right now. Are you also in private equity as well, as I understand, right?
Yeah. I mean, I think most investors, or at least the ones that within our ecosystem, you start off with like things you're comfortable with, right? A lot of us, to buy your first rental property is the way you get started. But then you kind of bridge into larger deals, apartment complexes, bigger stuff. And the way that the money gets pulled together is through a syndication process where, you have a lot of past investors. But that syndication process can be used to buy whatever, a pizza franchise, a CPA firm, a plumbing company, you name it, right? It's just a mechanism for legally pulling your money together. So, you think people like real estate because it's a hard asset. There's something tangible there. But yeah, definitely kind of now growing outside of that world into more venture capital. But if venture capital is way out here and real estate's here, in the middle is that private equity of existing businesses with existing P&Ls that you can kind of underwrite.
And so take us, like, for anybody that, like, that's really curious to get more in understanding how they can get started in terms of recognizing private equity, or how they can get started in their first real estate deal. I'd love for them to first of all really get an understanding of how you got started in real estate, and then how you're able to now bridge that with bringing on and being or have brought on and being an accredited investor, and then bridging that to how you're seeing the market being affected with the existing. Because, like you said, a lot of people are thinking, it's a hard asset class where you have something tangible, but then with the inflation, is that being affected, or people not really worrying about that right now? I'm curious to understand. I'm just learning myself, so this is where I'd love to learn from you.
Yeah, I mean, I'll explain it with like this framework that I created in my
Please.
second book, the Wealth Elevator. If you imagine like a building, there's several floors to this building, right? Most books out there are predicated to, broke guys who are just getting started, net worth of zero or less than $500,000. they may not make less than, $50,000, certainly under $100,000. That's kind of where I started. I mean, I wasn't in credit card debt or anything like that. I had a, good paying engineering job where I was able to save 50 grand a year, after taxes and all my expenses. So from there, I mean, I was on that first floor of the wealth elevator, which the name of the game is buy a rental property. Like I said, I eventually expanded it to 11 rentals. And that was kind of where I came to the second floor of the wealth elevator, which was dump your little annoying rental properties and then step up to more scalable syndications as an investor. But, I think you can't just start from, running, right? Or the second, third floor. You can't just go into private funds and private equity right off the bat. Ultimately, there's a cattle grading system here, essentially. If you don't got $1 million, you got to go make money, be a business owner, or do it the old-fashioned way, is save it and buy little rental properties to get up to that point. So that's what I kind of detail in my new book, The Wealth Elevator, where you got to figure out what stage of the game you're at first.
Amazing. And what about if somebody is already existing in like an investor, right? So I imagine that you work with a lot of great investors. People probably are investing into your fund. How does that work for anybody that is looking to invest into assets like private equity or real estate?
Yeah, I mean, this is essentially where I was back in 2015. I had a handful of rental properties. I was making good cash flow. And I was an accredited investor by definition of SEC $1 million net worth or greater, or making $200,000 or more a year. At that point, I was starting to look for these syndicated deals, these country club deals. Unfortunately, it's all who you know. If you go to Crowd Street or all these like websites out there, they're just broker dealers out there connecting you with other people. But a lot of those operators are more on the institutional scale. What you're trying to find is more off-market operators who, you certainly want to look for like a track record of, $1 billion B with a B of assets, gone through. Um, be careful. I mean, I've stepped on a lot of landmines with fake it till you make it operators and new guys under half a million, under $500 million of experience. But that's unfortunately where investors who are within the range of $1 to $5 million net worth, you have to kind of work with that echelon of investors. Very similar to like my whole construct of the wealth elevator. There's a bit of a pecking order in terms of operators, syndicators you work with. And at that point, you need to kind of start investing. And from there, the key is meeting other purely passive accredited investors along the way. And that's where you eventually find your deal flow. Going on the podcasts, looking up iTunes on podcasters who talk about real estate and syndications. And, what's worse is like the Facebook ads that pop up for real estate operators. These are often the worst places to go find places to invest. And this is kind of, again, it's all who you know and focus on meeting other purely passive accredited investors.
I imagine that there's, from your experience, actually, maybe instead of I imagine, I'm curious, what has been your experience with regards to real estate and, like you said, the space of principles and integrity, and so the alignment of what's in benefit for investors or people that are purchasing real estate, um, and how does it benefit? Like, what are you seeing? Where have you seen something that has gone all awry? And if so, what has that looked like so people can be aware or at least ask better questions?
Yeah, I mean, deals go bad all the time, for one or two reasons. And I think to kind of put it out there, I think the first reason is called the counterparty risk, is what this is called. Counterparty risk is basically like Sam Bankman-Fried running off with everybody's money, like we've seen with that BlockFi stuff. Um, and it's happened to me. Like my first deal that I invested in, I think I put in like 40 grand in that deal. I met him through a IRA custodian, just referral, but it was a junk referral, obviously. You know, those two guys probably were getting kickbacks and maybe they had beers with each other the night before. I I mean, I didn't know any better at the time. This is back in 2012, and the guy just eventually ran off with the money. And the other thing is the deal, right? I mean, it's pretty rare that the deals go bad. It's usually the people involved is the issue. So if you can protect yourself against the counterparty risks, you're going to be okay most of the time and more than exceed pro forma returns. But I guess that's like, how do you protect against working with dishonest people? Well, again, that's why I keep coming back to invest with people like and trust, and verify that with your ecosystem of purely passive accredited investors. Now, to give you a little bit more insight into this, maybe this isn't like a specific tip, but I'll tell you where not to go. The local real estate club or the free online forum or the Facebook group are some of the worst places to find other purely passive accredited investors. Accredited investors, guys who are busy, they got $1 million net worth, sometimes business owners. They're not trolling around at some free happy hour or Facebook group, right? A lot of those guys are the broke guys trying to get rich quick, trying to flip some houses or wholesale houses. Still in the real estate world, but very different.
I love it. I love it. It's great insight. And so now knowing that real estate obviously is a huge market, what are you seeing with the shift in terms of um, the inflation? So what's been happening with our economy? How's that been affected? Kind of where you're at, or what have you been seeing in terms of your experience? I'm curious because
Yeah.
as we know, the state of inflation is crazy, and our economy is really being affected globally. And so I'm curious to see how you're seeing people like work with that. How is that affecting you? What are your suggestions or things like this?
Yeah, so real estate is on a discount right now, specifically talking about commercial real estate. I could care less what's happening with residential real estate. That's not the world that we play in. Residential real estate is based off emotion. In the commercial real estate, that's where we play. And for the most part, real estate is 20-30% off of the highs it was a couple of years ago. So if you're new to real estate, it's a great time to get started right now. But let's kind of back. How did this all happen, right? As you mentioned, inflation skyrocketed because the country produced all this free money that went out post pandemic and during the pandemic, so that there wasn't anarchy in the streets. Looking in hindsight, maybe it was a stupid idea, but at the in those times, it was scary times, right? Like people were out of work, the country shut down for at least a month there. But as most things, the issues came up later. So you had rampant inflation. So what does the Fed do? The Fed, it pulls their one lever of increasing the interest rates. So from 0%, they jack that thing up to 5.5%, in which is a 40-year high, but it's the quickest time in history that the interest rates have been increased that quickly. So what this did is it took all the buyers out of the game. So speaking for myself, we're a buyer of real estate. We didn't buy stuff. Now, why? Well, when I look at a deal, I'm looking at like, if I'm going to put in my down payment or my principal investment, if I have to put in, a lot more, then my return on investment goes down, even if the price goes down. So even today, you can get prices, like I said, 30% off of what it was a couple of years ago. But right now, the capital markets, the lenders haven't improved because the interest rates are still high. Of course, it's looking like it's going to be coming down this summertime. But right now, the interest rates are higher. But more importantly, the loan proceeds that one would get, a couple of years ago, I would be able to get 70% loan to value. So I would only have to come to the table with 30%. But now it's more like 50% loan to value. So my down payment drastically increased, almost double. So for me to get the same return on investment metrics ain't happening. Therefore, I'm not buying. And I'm somewhat indicative of the rest of the buyers out there, which is why the buyer transaction activity has fallen off a cliff. And I would say like a fraction of what it was before. And because we all know that pricing is associated with the buyers and sellers dynamic, when you don't have buyers, your prices come down. And that, my friend, is why prices have come down 20 to 30% over the last year. Um, Great time to get in right now, right? Like I said, and especially as you're starting to feel this bounce off the bottom as the interest rates in the capital markets come back, right?
Do
It
you
creates
think
this
they're going to actually
amazing
come
buying
back?
opportunity.
Do you think they're
What's
going
that?
to actually come back? Do you believe that they're going to actually come back? Like they're going to come back? Because I'm super curious about this because based off of the state of inflation and how the GDP it continues to it's almost like we're about to hit hyperinflation, just like we did in the Weimar Republic, uh, just after World War I. So I'm curious to know: do you really do you find that uh, in terms of real estate, is it gonna be something that is a benefit to invest in the long run if the monetary value associated with the real estate market and where the value of money will be existing, is it gonna be something that gives is going to be a powerful asset class like it has been for the last 100 years? I'm
Yeah, I mean,
curious
if
to know
it
your perspective.
nobody knows, right? But if you were a believer that hyperinflation is going to be coming back, you load up on commodities and investments such as real estate. Real estate is like the mother of all commodities, right? Think of it. It's like a package of wood, steel, land, right? It's pretty much a commodity. And that's what we saw when we had almost 10% inflation a couple of years ago. The prices on real estate just inflated, right? And this is kind of why when there's inflation, they typically say it's a tax on the poor because the poor don't own assets such as real estate that goes up with the pace of inflation. So
So it just keeps separating the classes, right? So it keeps separating the rich from the poor during that inflation rate. And so even if people are investing into the real estate market, uh, the value of the house associated with the dollar value will go down. Am I correct, or am I confused?
the value of the house, the price that people pay as inflation goes up, the commercial real estate will follow.
Commercial real estate will follow.
That is correct in the long term.
Okay, so but then if the value, so sorry, so you're right because you're talking commercial. My apologies, and I'm bringing up real estate, family real estate. So my apologies.
Yeah,
So okay,
residential
so
real estate, like
yeah,
I don't know,
my
man. I'm
apologies.
just, just two guys talking us over beer. I don't know. I mean, like my guess on that is like you got a lot of guys that are stuck in their low interest rate mortgages, so they ain't moving. And you got a lot of the new people coming in that they can't afford it. Their jobs suck. Their pay sucks, right? And less household creations with less and less people getting married. I mean, I don't know. There's a lot of dynamics in that residential world, right? But what I do know, and you kind of mentioned it right there, this bifurcation of the wealthy versus the poor, right? The rich
Yeah,
get richer and the poor get poorer. This is kind of why we like to invest in the lower middle class, which is called workforce housing. No, we're not slumlords, right? But we like apartments that are, rents from $900 to $1,200 a month rent. Like so the guy is making 40 grand, 60 grand household income, just slightly below the median. We like this because the the rich are getting richer, but the majority of the people are, getting displaced out of their nice single family homes and having to live in, apartments. That to me is the long term plan for the masses, and quite frankly why I invest in that type of asset class and sector.
So, do you think that there's an alternative? Do you think there's another solution for investors to like, for example, start investing more into a lower class if a monetary system is shifting? And so I'm curious to ask you, because maybe at first I'll ask you, like, what is your thoughts on the Bitcoin community, the development, the transition, and how does that been from, I don't know if you're following it or not, but I'd love to get your insights in terms of the depth of that growth and how it's looked like over the last 15 years.
Yeah, I mean, I'm a bit like of a traditionalist. Like I like things that create utility for people, right? Like land and real estate. I look at it from a perspective of it's going to be really hard to displace that type of business, right? People need a place to live, especially
Right.
the lower middle class, right? I understand that Bitcoin, Ethereum as like the blue chip cryptos and all these other alternative coins, people make an argument that they're commodities kind of like gold. But at least with gold, I can hit somebody off the top of the head with, or like use it like bricks to build a house, right? Where it's like that's kind of where from like an investor value standpoint, I'm not really too much on board with the whole crypto train. And the other reasons why I like real estate is I can get the passive losses from it, the depreciation on paper to offset my taxes, which you don't get with real estate or stocks or crypto. But that's, I mean,
Sorry, can you
I'm
say
a
that
bit
again?
of
That
a
last part? Do you mind sharing that last part again?
yeah. So with real estate, you can depreciate the building portion, especially if you do things called cost segregations. We're able to write off a third of the building value in the first year. And this creates a huge paper loss for a lot of us. And that's really, I'm not a huge fan of real estate per se. I don't really like it, whatever. But the fact that it provides, human utility and the tax benefits, that's really why I'm a real estate fanboy here. Um, as
So
far
the
as
tax
like,
benefit. Sorry, go ahead. My apology. I didn't mean
yeah,
to.
yeah, it's the tax benefits, right? Like if I make 20% on my crypto, but I got to pay 50 cents on the dollar for the taxes because there's no sheltering, then I really only made 10%. But if I made 15% on my real estate with really good bank leverage, which you can't really use leverage in some of these other sectors, at least not safely. Um, but then I shelter my tax gain, then I'm making 15%, right? And so you got to take a look at this from more of a holistic approach. What I do like, I mean, but all that said, I really like the whole idea of decentralization, getting the currency out of the nations and kind of, it creates a different level of transparency and security, right? There's security in the chain of custody. I'm all on board with that. And I actually do see like, in our world, like it's a real estate is a bit archaic, which can be a good thing because it moves very slowly. But like how much money is spent on like title companies and escrow companies? I mean, if people have bought houses and you got to sign all these documents and like it's just so much friction costs and administrative fees and then you got to do like a title warranty to make sure that nobody has like blighted title on your asset. Like, what a mess, right? Like, so what some people are doing within our world is kind of tying together this chain of custody and transition of properties, and you maybe breaking up a property in 100 pieces or 1,000 pieces for people to own in a crowdfunding type of format using the blockchain technology. Like that, I think is kind of cool and definitely a disruptor in our type of industry, which is, traditionally very archaic. But I know why it's archaic. It's to keep the smaller players out. Like as I mentioned at the top, like the whole concept of the wealth elevator is if you don't got 50 grand, man, for a down payment on a house, you're not buying a house. If you don't have 100 grand or a credit investor, you're not getting into the syndicated country club deals. there's a barrier to entry at these points. So I can see where the kind of the not in my backyard people don't want this blockchain technology to displace kind of the ownership of shares to let the masses in, kind of like the Robin Hood effect for stocks. Um, but I mean, I'm a big proponent, like myself, like I wasn't an accredited investor for most of my life. I mean, I had a good job, but without getting into higher quality investments, I'd still be working my day job as an engineer. But that's kind of what like my passion is. Like it kind of upsets me that like hardworking Americans out there are just stuck in the traditional Wall Street garbage, 401ks, all the stuff, all the garbage that these big brokerage companies pump out because it's high margin, high fee for them.
Yeah, thank you. I appreciate you sharing all of this. So one thing I just want to share is that like crypto and Bitcoin are a big difference. Like crypto is a definitely like the alternative coins because of the difference in the proof of work versus the proof of stake. And so uh, Bitcoin is a really unique mechanism that can be integrated really way more off of the time chain, which has now become the blockchain for mainstream kind of understanding. But Bitcoin specifically, right? It allows us to understand really the essence of true sovereignty, true connection to minimizing the scarce resource like gold, like silver, that is allowing us to really connect deeper to an opportunity that will change the nature of our monetary system. And so that's why, when we talk about Bitcoin specifically, although I'm certain there's a space for all of the other ones in some capacity, some of the main ones. The reason that we focus a lot on Bitcoin specific is because it really is, from my perspective, the one that has the most integrity. And there's a level of principles and values, and I mean, I'm not going to go down the whole rabbit hole with you, but the component for me and the way that it's eating away and deflating some of the monetary system, as well as this constant rise, although it's volatile, this constant rise for the past 15 years. I do really see that, over the next 5 to 10 years, we have a huge responsibility of really transitioning the monetary system into something that is even more hard money, transparent, lucrative for the environment. And I know that you actually mentioned something really beautiful regarding gold, like we can hold it, touch it, feel it. But that's the beauty, is the system, just like in the internet, right? Like it allows us to understand that there's a different, the internet's not going anywhere. And the magic of having the capacity to see money, it's like right now we're really using digital currency all the time, right? But the component is that we think that it's on our credit cards, right? All of these things. The ability for minimizing payments and tax sheltering, bank leverage, things that you said that are extremely archaic. I think that it gives us a opportunity to really bring back that leverage to the people, and to really bring back that middle class, and that to the dynamic of what true wealth is, as individuals, as people, as humanity, right? So with from your perspective, or with this kind of understanding, do you think that there is a space for Bitcoin development or Bitcoin in the private equity space? Or do you see the opportunity of really being creative in the way that we can integrate private equity, real estate, and the growth of Bitcoin into the industry?
Yeah, I mean, I'm sure like you can use the blockchain to tie title to certain assets and then split title 100 ways, 1,000 ways. But like I said, I think, when you're looking at like having Bitcoin, Ethereum displace the people who, the current people at the top, governments don't like that, right? And you're seeing that play out. And I'm gonna put my conspiracy hat on because, and this is more infotainment for people, but like I think that that there is going to be some type of jockeying for a central, trade place that is sanctioned by the United States because the United States kind of controls the world monetary policy. And there is likely to be some type of US stable coin. Now, we haven't figured out who that player is or who the United States has deemed that person to be unofficially or officially. But until like you're not gonna it's not gonna be widespread adopted unless a government gets a piece of it, in my opinion. I mean, it, it's just like which is a little sad for sure, but I mean, I just see that that's how it's gonna play out. Just like in simple real estate transactions, the brokers are gonna get their piece of the action. The title companies are gonna get their piece of the action, right? That may go down over time, but they always get theirs, right? The big players always get theirs. I mean, it's their world. Um, but I think, yeah, like I said, that's kind of the cool thing about the whole crypto idea is that it's a big disruptor. It somewhat takes the power away, but the power is still controlled by the central, right?
You still think the central bank will control, like the central bank doesn't control when people transition into the Bitcoin economy?
Yeah, but there's other ways that they have oversight. Well, maybe not oversight, but like we saw it this past month, the one big inroads for crypto and why a lot of the cryptos took off is because the ETFs got approved, a handful of them. And that is the United States approving it through the SEC, Securities and Exchange Commission, was a big part of that.
Why do you think?
They
Sorry, go ahead.
I mean, they approve that stuff to give the larger brokerages out there the opportunity to have a very public and somewhat safer way for normal people, the masses, to adopt these types of assets. Um, when that happens, the volatility and the asymmetric nature of the investment goes down. Gone are the days that you're going to 50x, 100x your investment. Um, maybe it's like a fraction of that now, right? Because the ETFs are here. Um, but for some people, they may be happy with 5x, 20x, and they're happy that they can that there's somewhat of a central bank backing of this type of stuff. Um, but that's the nature of like, any emerging market, like what was maybe something that's a little bit more tangible is like marijuana facilities. That was a kind of a big thing, cannabis a few years ago, or actually not a few years ago, but like 5 to 10 years ago. A lot of investors kind of in our world, the private equity space, you know, the thing was bank, like you couldn't get bank financing for that type of stuff, right? Because it's technically illegal in your specific state and it's not really like federally accepted to a point where the federal banks, which govern all the other banks, can give lending on that type of asset class. Kind of has nothing to do whether it's legal to smoke marijuana in your state, right? It's more of like, can the operators get lending on it? And it was kind of yes and no here and there. It's kind of a checkerboard. But this was an emerging asset class where if somebody had the balls to go out and build a facility and fund it without bank financing, with just pure hard cash from private investors, angel investors, they were able to build a nice facility. And then when and if, now if is the big word, if the inroads to, having this stuff sanctioned and legal in their state came on board, they made a killing on this, right? But this is a very like nature of these types of emerging market plays is it's very speculative. And there's a very important concept called asymmetric investing. Things that could blow up 5x, 10x, 100x, but more than likely it falls on its face. Now, 5 years ago, 10 years ago, crypto, all the cryptos were kind of in this space. You could probably make a argument for Ethereum and Bitcoin today as more blue chip type of cryptos that it's very low chance of it going to zero. But it also isn't going to 50x, 100x on you anymore.
What makes you say that?
The ETFs are here. It's already I mean, it's already widespread adopted.
So you don't feel like Bitcoin can go to 50 or 100x
Not from this
because
point
of
on.
ETF?
Not from this point on. It's
What
not a new thing anymore.
what makes you say that? I'm curious.
When you 50x, 100x, 200x something, I mean, you're in the very pioneer stages of something. I feel like we're out of that stage.
I disagree.
Yeah. Well, that's why each their own, right? I mean, at the end of the day, like I said, I'm not an economist. I got most of my net worth in cold hard real estate and life insurance. I'm just a guy just guessing on crypto. But like, and I think that's important for people to understand. Like there's economists that talk about this stuff, but kind of it's important to understand where people are actually putting their money where their mouth is. You know.
100%. And
Um,
so I think
I
it's
think you're right, but I just don't have the cojones to go into something I don't understand is kind of my thing, right? And that's why I
yeah,
stick
we
to
can
cold
talk
hard
about it.
real
That's why I
estate.
love it because I want to get your insight because I do believe that there's an important component of really taking a piece of how private equity and real estate can integrate into a new economic system, and that's why BlackRock and MicroStrategy and a lot of these bigger guys are investing into Bitcoin, and this is where I believe like private equity firms, real estate developers, syndicators, they have to pay more attention to what's happening inside of the Bitcoin economy because at the end of the day, it's like Blockbuster. If they did it, if they paid more attention to what's happening with the internet, they would have jumped into Netflix a lot faster, right? So, is there a responsibility for private equity, real estate syndicators, family offices, venture capitalists, which I know there's some already paying attention, lots actually, but like you look at BlackRock, and they've invested tons of money into Bitcoin, and so it like what is it that just for any other that maybe there's private equity firm, a CEO founder listening right now, or a venture capitalist, or somebody that really is curious about real estate, and how can we start like based off of your wisdom. I'd love to really, what do you feel when it comes to like thinking out of the box or being creative? What can we do to really get that level of curiosity going inside of these brilliant minds that might be listening to the show, or that might look back at this in a year or two or 10 and say, man, like this is something that we can really integrate in a more meaningful way because of the shift of how Bitcoin and the economics has allowed real estate alongside private equity to for them to grow. It becomes another business opportunity. Let's call it, right?
Yeah, I'll give three examples here.
Please.
So like digging more into like Blackstone. Blackstone is picking up a lot of crypto these days, but I don't have the facts and data, but I'm still willing to guess that it's a small fraction of their total holdings. Which if you were a family office, $100 million net worth and above, you likely would be doing the same thing, right? They typically a family office will be going into some type of pioneering or emerging market like crypto with 1 to 10% of their net worth, right? Now, nobody listening here is on that threshold. Let's face it, nobody is. Now, if you just take your average private investor, $1 million to $20 million net worth, Likely for somebody on that scale of an investor, they're typically a operator or business owner of something. Let's just take something as simple as like a HVAC repair, business operator. Very successful one. 1 million, $5 million of revenue. Now, that particular individual would not place holdings in a passive investment such as crypto because they're better off, as the saying goes, investing in themselves, right? Them taking 100 grand, putting it in their own business, buying leads, buying more equipment, more people, they're going to get a higher, much more reliable return on investment there. That said, if somebody doesn't have very much money and looking to shoot for the moon and they don't really have any other options, right? I can see where people are like, well, real estate's too slow and I don't have enough money to get into a commercial real estate investment. Then yeah, at that point for that individual, then crypto becomes a very like might be the best option for that person. But I think like those are three different examples, and people kind of need to kind of look at where do they fall on the paradigms, like which floor do they fall on, right? To kind of go back to the whole idea of the wealth elevator. There's different floors to kind of wealth. Floor three is typically between $5 to $10 million, and then we call the penthouse $10 to $50 million plus and beyond. Different mindsets, different asset allocations, um different goals too. Some people, they just want $4 to $5 million net worth and they invest in T-bills and they sit back and relax and cash the checks, right? Other people, they want to grow more.
So I'm curious to think like, so imagine, in 5 years, hyperinflation has hit us and, somebody is worth 4 and 5 million, but that 4 and 5 million is actually really worth in, their current, the current money is like, when people were going in the back, like back in the day to McDonald's, it was like 25 cents to go get a burger, right? Now it's, I don't know. I don't even know. I don't go to McDonald's, but the point is like it's way above that. And so if that 4 and 5 million in 5, 6 years is uh worth 1 million in today's money, is that really a value add to the marketplace? Is that really a value add to an investor? Because the money, if it's broken and it's not necessarily of value because all they're doing is manipulating it and printing money, how can we offset that? Or from your perspective, is there a possibility to offset that other than Bitcoin?
Yeah, I mean, just don't have your money sit in your bank account and make 0 to 1%. You invest in T-bills, you get 2 to 5%, and
What
you're
are
probably
T-bills?
lagging
Sorry, I
in.
don't
You're
know.
probably
Sorry, I don't know what T-bills are. My
uh,
apologies.
treasury bills.
Okay,
The
sorry.
probably your closest thing to a guaranteed return out there. It's backed by the United States government. That will probably keep you up with the pace of inflation a little bit. Now, if you want to keep up with the pace of inflation, you might invest in life insurance for yourself, right? That's more like 4 to 5%. If you're somebody who is like the world is going to come to the end and inflation is going to be 10%, then invest in real estate, real estate, residential real estate. That'll go up with the pace of inflation. Um, I
Do you think
think
so?
like,
Really? Do
I
you
mean,
really
the
believe that?
value, the value that people get from real estate, which is the utility of living somewhere, that's what you peg. That's why it's pegged there, and that's why it will
Okay,
typically
I see what you're saying.
it will typically beat inflation, especially if you leverage it with good debt. It doesn't need to be to 70, 80% leverage. It can be just simply at 50% or less. But I mean, it's not that hard to keep up or beat even hyperinflation. Well, not like inflation in Brazil style, of course, right?
What
But
about Zimbabwe or Argentina?
well,
Like
this
what?
is, I mean, now you're starting to get into like, in a way, you're lucky that you live in America that controls the world policy of money. I don't really see that happening. If that's really your concern, I would kind of looking at some of these websites that get you alternative passports. But I don't know. I mean, at some point you have to stand on solid ground, right? Like I may not like everything in this country, but I certainly do think that we control the world's policy and we'll probably be in that position for quite some time. Therefore, I'm gonna go buy some real estate that's probably gonna outpace the the inflation.
In the treasury bills, I don't know, like when it comes to the treasury bills, especially since it's backed by the US government and what's been happening with the inflation and the constant printing of money, from my hallucination or my imagination, like I don't know, like I personally wouldn't invest in that because I don't really know the way that, especially since 1971 when Nixon took off the gold backing from the US dollar and started to just print whenever they felt like, and the central bank or the Federal Reserve, continued to just, as you've seen, it's been a solid issue, for countless years, decades. And so I think that there's a better alternative, and this is where I find that there's an opportunity for private equity or investors inside of real estate to get more curious even about how real estate and Bitcoin, or investment and private equity in Bitcoin, and how that really comes, and get more curious about it. Because then from that space, I really do feel like it becomes a married effort for something that is really hard money, not this easy fallacy and illusion of money that has been narrated based off of a story to manipulate, our people, like the people that exist around the planet. So I think there's a better way, bro. And I do believe that our generation, yours and mine, are really building it. And I think that it's in the best interest of any investor, I think, to get more curious about what money is, why they created it, and why the Federal Reserve continues to manipulate it for such a long period of time. Because, like you said, even with the ETFs, my hallucination, or from your perspective, from what I observed or listened to, do you think? And I'd love to maybe ask just a clarifying question from that. Do you feel like because they approved the ETFs, that's why entities like BlackRock had purchased Bitcoin or got into Bitcoin?
Well, I mean, the basically it's kind of like, think about it like this. If you were to build a city, right now, Bitcoin and all this stuff is kind of was on like gravel roads and dirt roads,
Mm-hmm.
right? The ETFs is in a way, we built some nice highways here or there. The inroads are created for average people to come in. And of course, you got Chinese ghost towns with a lot of infrastructure built, right? So never say never. But once, what we've seen here in the crypto world is like the inroads, that like these more highways are kind of built at this point. It's only kind of moving more stable and forward now. The downside is your gains aren't as high, right? It's not as speculative. And I gotta jump here in a little bit, but I'll leave with this kind of
Please.
concept of Sharpe ratio. I would urge everybody to Google what the Sharpe ratio is, maybe watch a few videos on it on YouTube. But it's this concept of the opportunity to make a lot of money divided by how much risk there is, right? Obviously, you want to invest in something that's going to shoot for the moon, get a 10 with very little risk, a 1,
Mm-hmm.
right? You know, and this is just a theoretical way of comparing different types of investments. Now, cryptos have a very, very high upside, right? I don't know what it is, 100x, 1000x, 1 millionx. I don't know, but it's pretty high. It's probably one of the highest things out there. That said, the risk is relatively high too. What that magic ratio of their Sharpe ratio for cryptos specifically for each altcoin or crypto, Ethereum in general, nobody knows. It's just a concept, right? But what I do know is T-bills, for one, they don't make very much, but you've probably got the lowest amount of risk in there, right? And then real estate. you make a good amount and you have a relatively low amount of risk in there too. So whatever investment you look at, make sure you kind of take into account not the upside, but the potential for losing your investment too, right? Again, this concept of the Sharpe ratio.
What I love is that you really finesse the clarity of making sure talking about alternative coins and Ethereum, but didn't talk about
Yeah.
Bitcoin, about connecting to that. And that I really appreciate because there's a real important
I'll give another example from
connection with Bitcoin.
our investing world. Like we have new investors that make this mistake all the time. And this is just on simple, private money lenders on house flips. If I were to invest and give a house flipper money to flip a house, I'm going to give my money to a very experienced one. These guys might charge, 8%, 10% to borrow money. Why? Because they're really good and they're really reliable. It's high quality paper. But what you see a lot of times, especially in like the local real estate club, are a bunch of bozos flipping houses because they watch a bunch of YouTube videos and they're super risky. And they're going to give investors like me 15, 20%. But they're inexperienced and they might run off with the money, right? Um, but I would take the reliable 8 to 10% all day long. Only an inexperienced investor would give their money to an inexperienced operator for prospects of making a higher return.
Always.
Now,
Beautiful,
that when
brother.
you
I
talk about
appreciate
cryptos, it's a lot more esoteric, right? We can't really justify it. Where do you want to give this reputable house flipper the money at a lower rate, or this crack smoking house flipper who's never done anything at a higher rate? Like that is very tangible, right? To make that comparison. But
well,
that's what's hard about investing, right? Sometimes you can't really make that comparison. You can't figure out what the theoretical Sharpe ratio is.
I don't know if I would compare real estate and Bitcoin or specifically to crack. I used to be a crack addict when I was 16 years old, and I can guarantee you that there is definitely a huge level of high standard of principle compared to in Bitcoin compared to any of the monetary value that's what's being created. I can't speak for crypto or Ethereum or any of those other, alternative coins because I definitely know that they're create what we call shit coins. However, Bitcoin specifically is one of the highest standard of principles that has been created based off of a monetary system that is going to work, and it will change the transformation of our monetary system because inflation and the inflation of money is continuing to skyrocket, and the manipulation of these governments globally is affecting us all. And enough of us have said enough is enough. So this is what I want to end with. And I would love to just, before you go, brother, really appreciate your wisdom because your insight and devotion to what you do is tremendous, and I really appreciate you. And finally, before last question, if you had 3 days left to live, what would you do?
Oh, I would probably just continue what I do today, just make more podcasts and some YouTube videos and some of these investment ideas that pop into my head and um I don't know, have a cocktail or something.
Beautiful.
Maybe have
Thank
some
you, brother,
high
for coming
fat
on the
Wagyu
show.
beef, who cares, right?
Say again.
Maybe have a good steak. Who cares at that point, right?
Beautiful. Thank you, brother. I appreciate your time on the show, man. It's amazing to connect with you, and I'm grateful.
Thanks, Eric. Bye.